Hello and welcome to Soluna Holdings first quarter fiscal year 2024 results and business update. I am John Belizaire, CEO of Soluna Holdings. Before we begin, I'd like to start with a legal preamble. The following content is completely qualified by the legal disclosures on the slide following this one, and our goal is to share with you some of our strategic thinking and financial analysis we are using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with our shareholders. We operate in a hyperdynamic environment, and that's a fancy way of saying things change quickly. What we are telling you here is based on our estimates and assumptions, which are our best guess, and we reserve the right to advise or revise our point of view based on our new information and changes in the business environment. Despite an uncertain, dynamic environment, we must plan and make operating and investment decisions, and this presentation lays out some of that for you where appropriate. And here is the legal disclaimer and disclosures. So let's get into the results. What you're going to see is our first quarter, which is the first quarter that Project Sophie, Dorothy 1A, and Dorothy 1B have been fully operational and have scaled up, and that is showing itself in our strong financial performance that you're going to see in the next several set of slides. What you'll also see is the effect of our strategic diversification to data hosting. It's really paying off and has us focus on several important and exciting new projects that we look forward to announcing in the next few months. And we also have positioned ourselves well post-halving, and that's helping to drive and launch our recently announced Soluna Cloud business. And also, we're focusing on confirming the Dorothy 2 financing and the timing of that project. So the next few slides, we're going to talk about the company's focus and give you some flyby over the highlights for the quarter. Let's talk about our focus for 2024. We have four major pillars, if you will, that we're focused on. The first is launching AI. We've made several announcements in the past quarter and late last year, where we began to lay the groundwork for how we're going to diversify our business beyond Bitcoin into the fast-growing AI space. One of the key focus areas for us is building a new facility. We've reserved about 2 megawatts at Project Dorothy for a new data center design we're calling Helix. That will be the pilot facility that we're going to build out, and it will be the landing place for new customers that are going into our collaboration we've announced recently to help grow that business. So launching AI is a big focus for us. We've got a lot of initiatives, some we've announced, some we haven't, and you'll see those coming down the pipe, but a lot of it is around customers, focus, technology, new data center designs, and new partnerships. The second area is optimizing our business. We are focused heavily, obviously, like our peers, on the post-halving optimizations, but we're also focusing on driving overall operational excellence for our facilities across the board. Our focus is to not only target the revenue growth, operations, and profit of those facilities, but we also plan to drive significant improvements in customer satisfaction, customer experience at the site, and we've got a whole number of initiatives focused on that. And we're also measuring that satisfaction through NPS scores that we'll begin to share with you as we collect those. The second is some financing activities we're doing. We recently announced financing around our AI business. We also have financings around the expansion of Dorothy 2 and our Project Kadi that's coming up here soon. So there's a number of focus areas around project level activities that are going to bring capital, and so capital formation is a big focus for us this year as well. And then the last is growing our pipeline. We continue to look to grow our assets under management. In fact, we want to expand that to 150 megawatts this year, and that is assuming Dorothy 2 and as well as other projects like our Katy project as well. So 4 key areas: launching AI, optimizing our projects, financing our projects, and also pipeline growth. Okay, let's get into the highlights. We had a record adjusted EBITDA. Adjusted EBITDA ramped to $5.1 million compared to first quarter 2023 of a $2.9 million loss. That's an increase of $8 million driven by a strong revenue growth and cost discipline. We had strong cash growth as well. Cash grew 85% from first quarter 2023 and 32% from the end of 2023 to $8.4 million. We also had another record revenue quarter. Revenue grew to up to 24% to $12.5 million compared to $10.1 million in the fourth quarter of 2023. We did successfully complete the winter demand response program period in ERCOT. So as part of ERCOT's our ancillary services plan, we completed the program that happens in the winter at Project Dorothy. And this is demonstrating really our ability to diversify the revenue of that project. And this is a approach that we want to replicate across multiple projects in our portfolio. More highlights. I've talked about the fact that we launched our AI cloud service. We announced it recently. It is in collaboration with a leading high-performance computing company, and we're putting in place all of the elements that will help us to begin to ramp customers into that site and also allow them to grow into the new Helix facility. We also are doing post-halvening optimizations. We continued that optimization to boost our hash rate for our hosting clients and our proprietary mining operations. And we continue to leverage Maestro OS as our key driver. We're using Maestro OS's upgrades to increase the granular control over our miners and to also help us increase the PUE, which is industry leading, and leverage the electrical design to really drive more improved joules per terahash or efficiency in those machines. And of course, if you missed it, we did announce a new CFO. John Tunison was announced as CFO, and he's replacing David Michaels, who will be returning to his role on the board. Now, I want to take you through the revenue quarterly trend. This is from first quarter 2023 until the last quarter, Q1, or this first quarter of this fiscal year. So Q1 2024, again, was the fully ramped period for the whole quarter across all of our sites and across all prior quarters. And what's exciting to see here is that revenue increased 307% versus the same quarter the prior year. If you remember in Q1, the company was just coming out of the turmoil with the business. We were beginning to turn the ship, if you will, beginning a lot of our diversification plans, signing new customers, finalizing the ramp-up strategy for Dorothy, and then the team then focused on executing the ramp-up of these things. We also changed the structure at Sophie, if you remember, moved it from proprietary mining to hosting. All of that really led to the ramp that you can see here. We decreased in overall revenue in that first quarter, and then from there we continued to ramp. By Q3, we were up 180%. By Q4, 75% increase continuing. And in the last quarter, we saw a 24% increase. So that diversification, that we did is paying off. And, if you look at that diversification, prop mining, went from making up 90% of the revenue in Q1 2023 revenue to about 51% in Q1 2024 is a significant change. And we have 49% hosting and demand response services. So if you look at the change in revenue, you're starting to see that diversification, and we show you some detail here. And you can see that demand response revenue growing. You can see the crypto mining revenue taking off, and then our data hosting. As we expand into these other projects, you'll start to see the data hosting portion of our revenue increase significantly, unless we do more joint ventures in those projects. But we have 50 megawatts that will, or 48 megawatts that will come online on D2, and then we have Project Katy as it matures as well, will be another area for us to invest and attract more customers for data hosting. Let's talk about gross profit. We're going to look at it quarterly here for the same period, Q1 2023 to Q1 2024. And as you can see, on this chart, we're showing revenue, cost of revenue, and gross profit. Gross profit is consistently improving from the first quarter of 2023 until Q1 2024. In fact, gross profit improved by $7 million compared to the first quarter of 2023, and $2.7 million over the prior quarter, which is a 62% growth. And if you look at that graph, you can see we're certainly heading in the right direction. Cost of revenue also increased, but started to level out there toward the end. So it's becoming more consistent in the business in the current configuration that we have. So gross margin improved quarter over quarter to 55% in the first quarter of 2024 versus 42% in Q4 2023. Let's talk about GNA. We continue to focus on a series of cost management programs. Last quarter, we focused on legal costs, stock-based compensation, and investor relations. Of the $4 million in GNA expenses, about $656 of that was non-cash stock compensation. The overall reduction was 10% in expenses related to the same quarter compared to the prior year. And as I said, most of our focus was in those three areas. We had some offset on employee-based salary compensation improvements for retention purposes. But G&A as a percentage of sales improved to 32% from 143% as the company continued to leverage the existing resources to support growth. And that is part of the Soluna model. The Soluna way is over time, as our projects and scale of the business, as the revenue expands, as projects footprint expands, or assets under management, you don't see a significant growth in the cost of the G&A to do that. And we will be focusing on ensuring that that relative size continues going forward. Thank you. So adjusted EBITDA has been on a steady climb. Again, in Q1 2023, we were just beginning to change our business model, and so you saw a reduction in profitability or EBITDA there, and you saw a reduction in our revenue at the same time, right? So as we exited proprietary mining and moved into more hosting and this more diversified construct, you see the effects of that in the first 2 quarters of 23. But as you can see, for the next 3 quarters from there, there's a steady climb. Our revenue improves significantly every single quarter, and you can see a steady climb on the adjusted EBITDA over that same period. And we're happy to say that in Q1 2024, we hit over $12.5 million in revenue and enjoyed a $5.1 million adjusted EBITDA, which is $8 million higher than it was in the same quarter the prior year. This is probably the best picture to show the turnaround that we've made on the business and the focus on growth that we're now going to be focusing on this year around those key initiatives for 2024. And last but not least, let's take a look at the balance sheet. Cash continues to grow with an increase of $2 million over December 31st, so a 33% increase there. Current assets improved to $17 million from $14 million over December 31st, so $2.7 million or 19%. That's mainly due to growth in the operating cash and AR, which is driven by our growth in our business. Overall assets are comparable with year-end, and conversion between long-term intangible assets fundamentally it speaks to the overall asset stability and the quality of the assets that we now own. Again, we're an infrastructure company. These assets outlast, different cycles in the Bitcoin space, and as we begin to invest in the next generation of our business, you'll see those values increase and benefit too. We have some liabilities related to interest payments and other liabilities. And another notable piece is the convertible notes decreased and continued to decrease from December. They're now down to about 6.2 million. Now, there's something new in here. You'll see a warranty liability. And this is related to the Fourth Amendment we did in the first quarter. This is where we repriced some notes in order to help us have access to more liquidity for the company as a way to, provide some insurance on the happening, bolster the balance sheet. Now, some of these warrants require shareholder approval because of the magnitude and SEC compliance. So we had to move those from equity to liability during the period. And so the impact is to essentially reduce the applied paid-in capital and essentially establish a new warrant liability that you see here on the balance sheet. And that takes place sort of at the end of the quarter. And it's $6 million is the liability that's on the sheet. That will reverse out once we get shareholder approval here at our annual meeting. Thanks. Now, I normally take folks through the company overview in the beginning of the presentation. I wanted to focus on the great results for Q1 in this recording and this presentation. But please feel free to download the deck, the full presentation and content around the business, where we're going, how our model works, why people choose the company, what our key revenue focus areas are all in here. And if you want to listen to a voiceover of that, I encourage you to look at our fiscal 23 review business update. At the beginning of that, I walk through the company overview, but we always like to include that in this content so you have it. So definitely review it and enjoy it. And don't forget to connect with us on LinkedIn and Twitter, also known as X these days. Stay up to date on the latest from our company. We have over 1,500 people in our newsletter. We want to encourage folks to sign up for that as well. Just follow the links on these slides, and look forward to talking soon. If you have questions, we do FAQs that you can find on our social platforms. We're also on LinkedIn as well. Just search the Soluna Holdings page and send us your insights and questions. And again, thank you for taking the time.